Hi, I'm Nick Appleyard, and CEO, President, and Director of TriStar Gold. TriStar is developing the Castelo de Sonhos project in central Brazil. And right now we have just completed a pre-feasibility study with some great numbers, and we're looking forward to the next phase of moving this towards production now.
Nick, welcome. Good to meet you. I was very sorry to miss you at Mines and Money. What's the next show that you're going to go to?
Well, probably PDAC right now. I think
Excellent.
we missed the Vancouver ones.
Yeah. Well, let's hope this next wave of the virus isn't too scary, and we'll see you in Toronto in March.
Yep.
So, can you, just as a kind of quick orientation, can you give us a synopsis of the pre-feasibility study that you've just published, kind of the headline numbers?
Okay, yep. So we upgraded the resources into the study. So we ended up with 1.8 million ounces of indicated resources, just around a gram, or just over a gram, and obviously an additional 700,000 ounces of inferred, which we're not allowed to add those numbers together. But that was the basis for the PFS. From that, we ended up with 1.4 million ounce reserve, 11-year mine life. Average production for 120,000 ounces a year. But I think for us, the important thing was that we had the heart of the project was, for the first 6 years, we call phase one, was producing 150,000 ounces a year, which is sort of where we feel this project naturally should be. And, really, really good economics, 320 million NPV and 28% post-tax returns. So it's looking really, really good. And the project still keeps delivering every time we do something to it. So.
And on that pre-feasibility study, are you comfortable with the outputs? Are you optimizing it in any way? Are you tweaking it, or are you now going to go into delivering the final numbers on what was laid out in that pre-feasibility study, or are you optimizing kind of certain aspects of it?
I think you stop optimizing until you shut the mine, to tell the truth. So yeah, we are optimizing. Right now, we've got metallurgical samples at a lab in Nevada. And we're looking at the relationship between grind size and recovery. We went quite conservative in our PFS, so we could have a higher degree of certainty that we can achieve the 98% recovery with a finer grind size. But we've got quite a lot of test work that indicates we could have a coarser grind size and not lose much recovery. So we're doing that sort of throughput plan optimization study right now.
Okay, good.
We'll keep looking at everything.
When I had a look at it, the metallurgy looked relatively benign. I mean, there's great recoveries. It's pretty clean, isn't it? No nasties in there.
It is. There's not a grain of sulfide on site that I've seen. It's pretty close to sand and fine gold, and it's been silicified, so it's hard. That's about it.
Now, I've got a personal preference to see NPV 8 numbers, just because that, theoretically, the discount rate that one uses should be the risk-free rate of the project, or the working average cost of capital. Now, you've used a 5% discount rate, and it's given a kind of pretty chunky NPV 321. But yeah. I guess that if you put in an 8%, it would probably come down to close to 260, which is roughly your capex build, which is fine. But am I kind of right? Is that about the change? Can you remember on the sensitivities?
I can't remember offhand. I know it was still strong. We've got that number. We've got those numbers in sensitivities. We obviously ran NPV 8 and 10 as well. So it did come down into that range for sure. It sounds close to where it would have been. I don't remember exactly offhand.
Yeah, sorry. So to spring that one on you. When I look at it, because the metallurgy is clean, and the mining, in a sense, this becomes a mining and a geology equation. If I look at what you want to be absolutely sure about is the grade, and then the other side of things is you want to be sure about the tons that you're mining, because it's got a strip ratio on there, so you've got to mine the ore and the tons in the strip ratio. So it becomes a kind of an earth-moving exercise. Can we unpack a few things on grade first and the resource model, if that's right?
Okay, yeah, the resource model we're very comfortable with it. We're very lucky in the fact that Mike Shrivastava, our VP, literally wrote the book that every geologist has studied, for on resource estimation and geostats. So he's very, very good at what he does. So we don't have any concerns there. Obviously, as the trick for us is looking at scale as you sort of go up. If we're looking at a 10,000 ton a day process, or if we came back to 5,000 ton a day, you can get more selectivity. And there was a lot of discussions on equipment selection, to how selective you can be, to what the SMU is going to be. Therefore, that goes straight into the grade calculation. But I think we're very comfortable with that. We've got to do, we've done some work on grade continuity. That's part of the same equation. But again, we've had really good predictability out of the deposit, so we're not too concerned. But I think you're on the right track there. Those are the critical issues here.
In the geostat section of the technical report, it talks about I think it's a kind of a 30-meter confidence range on the semi-variegrams, on the range of the semi-variegrams, when you get into kind of the geology side of things, or the geostat side of things. And that would indicate that you kind of need a drill spacing which suits that. And in the recommendations, there's kind of quite a lot of talk about kind of, they're recommending, it was $4.6 million worth of drilling. It's quite a big infill program. And can you remind me what the drill spacing is? Because I'm is it 100 meters roughly across the resource, 100 meter squares, or is it tighter than that?
It's tighter than that. So roughly we sort of talk about 100 meter spacing for inferred drilling, 50 meter spacing for the indicated resources. So obviously, as you move into measured, the only way you can really infill in 50 meters is a 25 meter space drilling. So I believe that $4.6 million is 25 meter space drilling for the first 3 years of mine life, to get the first third of process, or your payback on proven reserves. Sorry.
So that's to take the indicated up to measured, and is it going to bring some of the inferred? Are you going to fill in the hundreds to 50s and bring some of the inferred into indicated, or is that not really part of the plan?
That's not really part. This is really just to move this up to a bankable feasibility study with 1/3 of the project, or the first 3 years roughly, on measured resources and converting to proven reserves.
Okay, great. And then on the mining side of things, there's of course, this is an analog of Tarkwa, which is the Goldfields operation in West Africa. And when they started, I think I visited Tarkwa I visited Tarkwa in 1999, right at the start of operations, and they're still going now, and they've gone underground. They struggled to begin with, and you'll benefit from what they learned, obviously, because they published papers on it and they've been operating successfully for 20 years. But they struggled with the hardness and with the intercalations of non-mineralized beds, because these reefs, these placid paleoplacids, as you know, you have pay patches and then barren patches. Can you unpack that a bit for me, and kind of your relationship with what's happening at Tarkwa and what you've learned from them, and how you're informs what you're doing at Sonhos?
So absolutely, it would be, obviously we want to learn as much as we can from them, and from Jacobina is the other paleoplacer, which is analogous, and the three of them were sort of formed at the same time. But we've sort of hired and have on our advisory committee Dr. Rael Lipson, who may have even been the chief geologist for Goldfields when you were down there, but he was the chief geologist for them. He now teaches in Denver and does some consulting. So he's been helping us a lot with everything he learned in his time as the chief geologist covering Tarkwa. And he's also brought another expert or two with him as consultants to us. So, obviously, as we get into the mining, we'll hope to learn on the mining side. As we've been developing it, we've been starting off learning on the geology side how these beds and the reefs, align, how they work each other, and how they rework each other at times as well. So we've learned a huge amount from Rail Lips and from what he's brought for us from Tarkwa. So, And I think we'll hope to continue that as we get into mining. And I mean, obviously, that's the next step for us now.
What's he tell you in terms of kind of what it feels like, what it looks like relative to Tarkwa? I mean, what are the differences and what are the similarities?
He says if you took a tray of core, you couldn't tell the difference. That's from what I've heard. The attitude within the ground is very, very similar. It's, I mean, I think it's Idioprim is that the sort of adjacent deposit in Tarkwa has got some hydrothermal alteration, so we haven't sort of, we're sort of looking for that, and we're looking for some reworking, but from everything I understand, they look very, very similar. I mean, I think the scale, the sort of the size available, the space is a lot bigger in Tarkwa. So, one of the first things, when I was down at site with Rail, we sort of gave him a few days to look around and showed him the whole thing and said, okay, what do you think? And he's like, I can't see it getting over, like, I can't remember what the number he had. It was like, I can't see it getting over 8 million ounces or something like that. There's just not enough space. And we're like, we'll take that,
Yeah.
Because at that point we were looking, probably had 1 million or 500,000 ounces, and we were looking to grow, and we've always had this thought in our head that 2 to 4 is sort of the size of this deposit. So, and his number was above that. So, look, you're not going to be anywhere, even half as big as Tarkwa. And we're like, that's fine. A tenth of Tarkwa is still 3 million ounces or so. So that's where we want to be and where we think it should be.
And is that constrained because it's been deformed into a bowl? So you don't have the kind of it's been eroded away off the tops rather than having the lateral extent that you'd have at Tarkwa Idioprim.
Yeah, basically this is just all that's left. It's a little island that's left. The original alluvial fan would have extended laterally probably, and that's just gone somewhere. This was deposited here, 2.1 billion years ago, and probably buried quite deep between then and now, and it's come back to the surface, but there's only a remnant of it left. So we probably have, I don't know what it is, 10 kilometers sort of across, but the bowl takes a lot of it too deep to be of real interest to us.
So they're kind of the bottom bits. And so you're just going on an open pit, and what do those pits kind of pull you down? How far do your pits go down?
Our drilling is generally, in our grid drilling for resources, 120 meter deep holes vertically. Pits generally bottom out, and our pits cannot go below the bottom of drilling because of the resource estimations we're using. So 120 meters is basically the bottom. I think it's a couple of spots we've pushed it down to 140, but just following a little bit of good grade. But in general, 120 meters. And then that becomes a kind of a strip ratio game. So it kind of it pulls down as far as it can be stripped. Absolutely, yeah. And that's also where we look at it is, okay, we know that the pit's optimized to the bottom of drilling, and we could put another line or two of drilling and it would follow it down. But we've also got a long strike to go. So it's like, well, why chase the sort of lower margin stuff deep? We're better drilling laterally, and taking more shallow stuff horizontally, because we've still got more drilling, long strike to do. Okay.
Well, can we come on to the exploration in a bit? But just on the mining of what you've got, I think in Tarkwa they're talking about they were mining within 30 centimeters of accuracy on the hanging wall and 20 centimeters on the footwall. I mean, they got their eye in, absolutely. And presumably your team is going to be taking that similar approach, just to really just be, I mean, it's slightly different because you're not quite so flat lying, I shouldn't imagine, but selective mining, is that the way you're going?
Absolutely, yeah. And that was sort of went into the equipment selection. We've gone for, obviously they're moving a lot more material at Tarkwa than we are, but we've gone with smaller equipment so we can be more selective in the mining and get down to those sorts of ranges and in our dilution.
And you've got some. What about the stripping? Are you using similar sized trucks for the stripping, or are you using kind of bigger kit to get the strip off?
Right now for the PFS, I think they just had similar style trucks all the way through. But I think maybe that's one of the areas, once you get a little bit more advanced, you would change.
Look into the cost benefit of
getting bigger.
Yeah, mixing up the fleet a bit.
One of the real challenges for the pre-feasibility study was getting accurate costs during the COVID period. It was with the supply chain issues we've been having, it was a challenge getting costs that you felt comfortable with, in either direction.
Oh, I think getting accurate costs is going to be difficult in the year ahead anyway, with inflation and steel. I'm not sure we've seen the flow through of the changes in material prices into end product prices. I don't think that's settled down yet. So it's going to be, I think feasibility study is going to be really hard over the next couple of years just to get accurate numbers.
Yeah, no, I agree completely.
So what is your schedule on a feasibility study?
Oh, we're still we're doing the optimization now. Obviously, we're doing permitting activities, a full steam ahead, and then it's going to take. I think we're applying for our preliminary license and permit in April, and that we roughly estimate will take 18 months. If it goes perfectly, it can go quicker, but permitting never does. So 18 months for that. We would hope to get the feasibility study done in parallel with that. There's nothing needed out of the feasibility study for permitting because we've got the project tied down well enough for permitting now. So the idea would be to do it in parallel with that permit coming through over the next 18 months.
And coming now to the exploration side of things, to kind of go alongside of that timetable, will you have any money to or budget allocated to kind of the growth side of things, and kind of in terms of the within the feasibility study, you're improving the value per ton. Are you going to be adding new tons through exploration?
It's going to really depend on the funding. We'd love to, we would like to, but we've got drill programs defined now. We work with an AI consultant, so we've got all of them. We sort of focus them on giving us optimizing our drilling for new exploration, for resource growth, and for reserve growth. But now it's just a matter of how much money we sort of get over the next sort of 12, 18 months and how much we can allocate to that. So we would like to. I think I would probably like to grow the reserves a little bit as our first priority. I think that's the easy target. That's the easy one that adds direct value. Whereas if we identify more inferred resources at the similar grades, I don't think it would add a lot of value to the company. Whereas if we can add to what we call phase one, and add more reserves at over a gram and be producing at 150,000 ounces a year for 8 years instead of 6 years, I think that makes a big difference will make a big difference to the NPV and the value of the project and the company. So that would be the focus, I think.
Yeah, that makes perfect sense. What about you mentioned it depends on the funding situation. So where are you in that process? And what have you got, and what's the?
We got about $5.5 million US in the bank right now. So it's sort of plenty to keep going with that permitting and stuff. And we are looking at our options now on the best way to raise a bit more money to get the bankable feasibility study done. So we're sort of looking at options. We don't want to rush to the market when things are like they are right now. We've got a few options in front of us. We're just looking at the best way to do it. And one of obviously is get the optimization program out that we're doing with a throughput, see if that can get a little bit more attention to us and show people what potential this project really has, above and beyond what we've already published, and see if we can get the price up a little bit and maybe raising money at a higher share price.
It's been a tough few months, isn't it, into the gold stocks? My goodness me, everyone's been beaten up a bit.
Oh, it's horrible. You put really good news out. I mean, I was so happy with the pre-feasibility study, and everyone who's sort of seen it has been really happy with it. And yet, you speak to the odd investor who doesn't read everything in detail and go, well, must have been something wrong because your share price went down. And we're like, no, it just funds. If the funds are getting redemptions, they have to sell whatever they can. So that's what sort of hit us around the publication of the PFS. That's all right. I mean, people can buy, people can sell. It creates an opportunity for everybody else if there's a cheap price. So there's been quite a bit of insider buying going on right now as we recognise that ourselves.
What's the institutional kind of support for the company? When you talk about fund selling, have you got kind of a spread of funds on the shareholder register?
Yeah, I think our core funds who have been with us for a while, the US Global, Gold 2000, RBC, are all still there, but it's sort of some of the smaller ones who sort of come into a placement and come out again when they buy a couple of million shares. Those guys sort of come and go a bit quicker, but the US Globals and Gold 2000s and that they're solid and supportive all the time, so that's good.
Great. Okay, so you're cracking on with the feasibility study. You'll be submitting for the permitting in April, one hopes. What are the other kind of news items that investors can keep an eye out on, kind of the potentially kind of catalysts in the next 6 to 9 months?
So I think the first thing it's going to be the optimization study on the throughput, because obviously that'll add change the NPV IRRs in the project straight away, and that'll be positive coming out in Q1, Q2. It could well be that we do start drilling, that we allocate a little bit of money to reserve expansion drilling and start drilling late Q1 or into Q2 as well. We are talking to some drillers down there to do that. So there'll be the more immediate things, and obviously the permit filing and that's sort of where we'll see ourselves keeping busy for a while.
Yeah, and of course, most of the people I speak to seem to think that the conditions are right for a rise in the gold price, of course, which would help every gold developer and project.
Well, I think the other thing we're seeing, it's because sometimes especially the small caps like ourselves don't always move with the gold price. It's a different wave sometimes, but we are seeing M&A activity starting now. I think we've been waiting for it for a few years, and it's starting. I mean, G Mining bought Tocantinzinho, which is 1,000 kilometers north of us just recently. Hochschild have just bought Amarillo Gold, or are buying Amarillo Gold right now in Brazil. Appian, I think, sold to Sabania, something plus $1 billion M&A activity in Brazil. So there is a lot of stuff happening, and if you're looking for Latin America, Brazil's the place right now. So and I think we're the last junior with a multi-million-ounce deposit, that's fairly advanced. So I think that's the positive side that I see as almost more than the gold price itself, because the producers, even when we're complaining about gold being down a bit, it's still nearly $1,800. Those producers are still making a lot of money, and then they're not replacing their reserves, and there's very few deposits left in good permitting locations. So. Yeah.
No, you're absolutely right. They, in a sense, I wasn't suggesting that the gold price isn't a good price today, but it's almost as if the valuations are being crushed. If you look at the junior cap stocks in the gold sector, they're all trading at such punitive discounts to their net present values or their net asset values. And in a way, what the junior sector needs is for that discount to be reduced as fresh money comes into the sector, and that feeds straight back to your point about getting a few redemptions in the funds, and suddenly everything, the whole balloon deflates a bit.
Yeah, but I think also that you do get that M&A excitement can bring people back in as well.
Absolutely, yeah.
I think we lose a few investors if things stay stagnant for 6 months, 8 months, a year or two, and then the sort of the more aggressive investors who would come into gold go to Bitcoin or the marijuana stocks, and because they're a bit more exciting, but when the M&A activity starts, mining gets really exciting really quick. So I think that's what'll get us going next year.
Yeah, absolutely. Good. Well, thank you very much. I feel as if I know much more about the project now. Are there any other aspects that you kind of want to bring out that I might have missed?
I think the only thing I didn't touch on is, we said we're getting into permitting, and but we've done all the baseline is pretty well complete, and there's no red flags, and it's a great location because it's just farming country, so it's not pristine environment. It's we sort of take the ESG stuff really seriously and sort of think that advanced countries like where I am and where you are there, you sort of got to help Brazil develop stuff where they should be developing it, and keep their itinerant workers out of the Amazon. So we're sort of part of that solution to that problem, I think. And develop it in farming country. It's already previously disturbed and just damaged by farmers and illegal miners historically. So this is a good place to develop an asset in Brazil, and it should get permitted easily.
Yeah, no, I couldn't agree more. The positive social and economic impact of a mining project like this was in a local and a regional context is so powerful. Good. Well, Nick, thank you very much. I look forward to hearing more from you during the course of next year.
Yeah, look forward to it as well. Thank you very much.
Great. Thanks.